Hi everyone, welcome to this Xoogler community meetup. This is our first of our personal finance discussions. Kushagra and I was inspired to set this up as we heard a lot of folks wanting to really get a lot of financial information and sharing and knowledge from each other. For everyone who was at Google before, I'm sure you realized the financial planning alias was one of the most popular and helpful aliases that was at Google. And so hopefully we'll be able to be as helpful to you after you've left Google. What I wanted to make sure we got is some insights from one of the experts we have, Kevin Xu. So he's here, live in Palo Alto. You probably recognize the hat over there. You probably should wear it so that we can take a good screenshot of that and we may recognize him. All of you probably saw the article I linked to in the email confirmation of this event. He was revealed to be Sir Jack, and he's here to share as much as he can about what he did to turn his 35K bonus into $8 million in his Google 401k. We're going to do a quick fireside chat for the first half an hour, but you can start typing in questions or raise your hands afterwards. He's here to really help all of you to perhaps make financial decisions that could be most helpful to you and your family. So we're just in our office here, Kushagra, Ajay, and myself have set up this company called Blueprint. We're trying to make sure the benefits of the Xoogler community can be spread to everyone else. During the layoffs, we felt that we were fairly selfish, only focusing on the ex-Google community. Obviously, we're going to make sure this is the best community out there, but we want to make sure some of the benefits that we all receive can be shared with everyone else. So that's why we're in here in Palo Alto. So Kevin, why don't you start with your journey? You went to college.
Sorry, before you do, so part of, didn't want to spoil the flow. Sorry, Kevin. As advised by lawyers, none of this constitutes as financial advice. Do not make any decisions based on what you hear. We are a company now, so I have to put our disclaimers out there. So thank you, Kevin, and sorry about that.
Like how we had in Google, there's a lawyer cat message. Aliases. So thank you for sharing that. But Kevin, you went to college up the street. Tell us more about your background, how you got to this point in time. Start things off.
Good. Yeah. Hi, everyone. Kevin Xu, also known as Sir Jack, full name Sir Jack a lot. Since you're all on your computers, I mean, you can just look it up at my Reddit profile and all the receipts and my whole histories, everything's out there. I'm a very open and public person. I mean, under the pseudonym until I talked to myself on Forbes a few months ago. But you know, my story is probably super unusual, right? It's like going all in one stock at a time, like some meme stocks, some like traditional stocks, in the Google 401k of all places. And I think it's worth rewinding the clock a little bit, just like, why did I even do that? And I think there's something to be said about, at least this is all my opinion, about late stage capitalism, modern day capitalism, the invisible hand squeezing the remaining productivity out of everyone for the sake of shareholder value. And the American dream and how it's just been a lot harder, right? Just like to, people lament a lot of those kind of the difficulty of the increasing wage gap and the systemic problems and pressures, all that kind of stuff, right? And so really, I see some of the modern day movements like WallStreetBets, like FIRE, even anti-work and lie down culture as all different ways the current generation is lashing out against the difficulty to just live, a middle class or achieve an upper class lifestyle. I mean, you have FIRE, which is probably FIRE, which is the more responsible version, which is you work hard, be frugal, save up, hit your number, that you feel at a safe withdrawal rate, right? And then you can essentially retire early. That's very popular amongst at least many Googlers that I know. And then you have the anti-work or lie down culture that brought up recently, who want to kind of burn the system down or kind of just exit the system entirely. And then you have this weird corner of the internet called WallStreetBets, where you have people YOLOing into like zero DT options and other kind of high risk stock plays, basically as lottery tickets that they think they're a little smarter than the average person on, to kind of make that, trying to break out of the ranks, right, and escape the rat race essentially. And it was really refreshing because to me, I actually grew up with CNBC on the TV all the time. Yeah, so my parents were basically, I guess, like day traders. I don't know, they never really actually talked specifics to me, but I basically grew up with CNBC all the time. At dinner table, they would talk about stocks. I remember my dad being bearish Amazon, being like, they just sell books, I don't get it. And to me, I always thought it was the dumbest thing because you're not gonna beat hedge funds and quants, you know, and the TV. You're always gonna be the tail end of this, right? It's like not worth playing. And so I really invested in anything because the concept of like a 4% or 7% return on index funds was really boring to me, right? Like I was always seeking to escape the rat race in kind of a quantum jump up. I'm also very impatient. That's probably a big one. So rather than kind of working, things like startups attracted me, right? Things like crypto started attracting me, and then public stock investing was still kind of boring, right? The typical returns are like 7%, maybe 20% a year, something like that. But WallStreetBets was the first time ever where I found it so refreshing that people were candidly, openly sharing screenshots of exactly what they're in. They're like high-level thesis. They weren't like talking down. They seemed like average, typical people. And so, it was just really, really refreshing. And then I kind of started creating my own strategy, sharing it on forums, and kind of gaining my presence there.
Great. Well, before you go there and dig in deeper, let's talk a bit about your Google/YouTube experience. What did you do at Google? What did you do at YouTube?
Sure. Yeah, so I joined Google in 2019. I was a PM at YouTube, specifically YouTube Commerce Platform team. So I was in charge of all the subscriptions and refund flows on YouTube. And 2019 was great. 2019, it was like a solid year. I was kind of recovering from my kind of crypto years, and it was really, really good.
And there was then when you decided to actually do those trades on your 401k, right?
Yeah. So what happened is that because I joined in 2019, I think it was February 2019, my first bonus was in January of 2020, right? And I heard it lands like January 26th or something like that, right? And because again, I was coming from trading crypto in 2017-18, I had no money. I actually wanted to take the bonus and put it in my pocket and like buy something nice with it. By Google, they defaulted to your 401k because that's the sensible choice, right? And there's a matching, so like almost everybody wants to do it. But I didn't want it. I wanted it in my pocket. I'll take the tax hits, okay? But I didn't realize that the deadline to make that decision was back in December. So I was like checking, like, hey, where is it? And then boom, it just lands in my 401k. So that's how I got like the 19K plus the matching plus some leftover from previously. So that's how I started February of 2020 with 35K. And again, with that, my background and my impatience and my other views on investing, I was like 35K in these mutual funds or Target 2065, whatever retirement funds. I was like, this is boring. I can't touch it for 30 years. What are the other options I have? And I'm probably on financial planning or somewhere on the wikis. I learned that Google provided a self-directed brokerage option for a 401k. And that's pretty rare apparently amongst many companies. I haven't heard of any other companies really offer that. Yeah. So on Vanguard, you could like literally just move the money into the self-directed brokerage thing and actually buy individual stocks with it, right? No, I mean, there are some guardrails. You can't do options. You can't do margin, no margin. And they also avoid some kind of weird like leverage ETFs kind of stuff. But you can buy single stocks. And so coincidentally at the time, I heard about COVID, right? This is February 2020 again. And I heard about COVID and I was researching like face masks and the difference between KN95 and cloth masks, whatever. And I stumbled upon this Salt Lake City company called APT that produces face masks in America. And I was like, okay, that might be a good thing. And I just decided to go all in on this one company, APT. And then within a month, I tripled from like 35K to 90K. And then I parlayed that into another company called CODX, which was a PCR testing company, also based out of Salt Lake City, Utah. Again, the kind of the COVID play, right? And that doubled from like 90 to 180K. And TLDR is I just kept doing that. I had a very simple strategy. I just went all in one stock at a time because my thinking is like, I have a high conviction bet. I've researched everything I can about this. I think they call me a momentum or swing trader, I guess, in the terminology, right? I look for a catalyst. I look for some good momentum. I look for some earnings report that people are looking forward to. And I kind of just sort of, go all in and just like follow that swing up and try to time it as close to the top as possible.
Amazing. What an amazing run. And did you know that you want to just put in one stock previously, or did you do those investments, or was it just because of that strategy that you got into?
Oh, I think with 35K, like, I don't know, 5K or 10K of that would not be meaningful, right? And I didn't really have any other solid thesis at the time. And so, yeah, it was just kind of a weird accident where I was like, okay, let's just put it all in.
And how did you do this research to hear about which stocks, particular stocks to buy?
A lot of time online.
Was it Reddit? Was it other options? Or
It was primarily, in the beginning, it was primarily Reddit and StockTwits, right? Where people kind of, use these hashtags and, but it's like a lot of noise. And I think if I had a superpower, it's just my ability to kind of read things really, really fast and kind of like parse the signal from the noise, right? Like what is actual rumors, what is like sketchy websites people or no sources versus what's like actually credible, and then what's like the sentiment around like the second order sentiment around that. Like a good example of that is I went all in on the Norwegian cruise lines the summer of 2020, right? Because it like all the cruise lines got decimated 85%, but there was this false belief that the CDC would lift cruise guidelines and let people start cruising again, and that's like a potential catalyst, right? I didn't think that was kind of true, but a lot of people believed that that was actually going to be happening, and people were taking screenshots from like Facebook groups where people were like sharing coupons and other promotional marketing material for most cruise lines. And Norwegian cruise lines had like the smallest fleet, so I felt like they were not going to go bankrupt, and decent numbers. And so so I was able to catch like this like 60% bounce just because I got lucky.
and so clearly you know when to buy, but how do you know when to sell? Like, it's also equally important. How,
Selling is basically when the thesis is either dried up or a little bit of TA and like volume is dipping, right? Volume dips, that's usually a sign that you want to that there's less retail or just the investor interest in the stock, and so it might either flatten out or drop.
and so how many hours per day, how many hours per week did you need to do this kind of research? For people who are trying to think, maybe I should do that as well. How many hours per week did you have to spend on this?
My boss knows everything now when I was at Google, but it was pretty time consuming, of course. I was only able to do this because of work from home and COVID, right? I literally got this like ultra wide monitor that allowed you to plug in two laptops like side by side. And so I had my work laptop on one side, I have my other laptop on the other side. And one benefit of being on the West Coast is that it was 6:30 to 1 o'clock is the time frames, but it was kind of like I was all in. At one point, millions in one stock, right? So I had a candlestick chart open all the time, and I was just like laser eye, focus on the minute by minute movement. So it was pretty stressful.
Yeah, no, I can imagine. And how did you decide to leave finally to actually start your company? Tell us about that journey, please.
Sure. So, honestly, not financial advice, but you look at even how I talk and talk about myself online. I just think I just got lucky. I mean, everything from literally how this journey started to just I decided to use this style of trading during the pandemic of all ZERP phenomena, and even the exit, it was just a happy accident, right? So a number was roughly 10 million, right? And it just kept going. And so I hit 10 million for literally 1 minute, and I got a screenshot of it. And there's actually another saying in the community that's like, if it's good enough to screenshot, it's good enough to sell. So I wasn't able to capture it then, but I went to kind of dip down to 9 and then 8 million. I was like, okay, 8 million is kind of roughly my line. I think I'm happy. I'm happy here. I can at least leave Google, figure out what I kind of want to do next, right?
Amazing. So it was 8 million. Then you went to your boss saying, I resign. And did you know you wanted to start your company?
No. I just kind of wanted to definitely just take some time off, let myself get bored, catch up on those quadrant 2 types of work, getting a good accountant and there you go. Good health and all that stuff.
Tell us about Afterhour. What is it, and how did you just think of launching this company?
So it was during this these couple of months where I was kind of letting myself get bored. And by the way, now we're fast forward into Q1, Q2, 2022, right, where the market was just dying, and I wasn't invested. I was in cash the whole time, and yet I still kept coming back to these finance communities. People were speculating on what JPAL was going to say at the next Fed meeting, right? I started forming this thesis that the finances become entertainment for a large portion of folks. Just the same way that people would gossip about sports in between games, we will be gossiping about what inflation is going to look like next month. And we were looking at candlestick charts and we'll all talk to each other on Discord, right? Similar to how people watch movies together. And so I was like, none of these places really scratch the right itch for me. Reddit is way too noisy. WallStreetBets essentially died after the GameStop movement. It's nothing more than a glorified Instagram meme page now. Yeah. And Twitter is a cesspool. Discord is pretty good if you find the right community, but it's really hard to find a real community and it's just not scalable, right? You're in a million Discords. And,
community not scalable. Someone should solve that problem.
and so I was like, God damn it, I guess I have to build something here. Seriously, because I wanted to recreate the magic of that early community I was part of in WallStreetBets before GameStop, where people were sharing like authentic DDs and positions and gains and losses and being transparent about it. And really striking a right balance between like signal versus anonymity, right? So like actually tying it back to Googler, the financial planning and investing mailing list, I loved those when I was at Google.
Super
And
helpful.
I made sure I joined the Xooglers investing mailing list. And there's also another one called Day 2 investing mailing list, I think started by some Amazon/Google people. I love them, but I never felt comfortable participating in those, especially because I think a lot of my thinking and theories are really out there, right? I was afraid of the social stigma, a coworker finding out that, I'm doing these crazy plays or just stupid or stuff like that, right? And so I think that I started, that's why I created Sir Jack and Sir Jackal. I just felt so much more freer talking about finance under a pseudonym and talking to more and more. Ever since the Forbes article came out, there's a section where I say that, like, I think finance is such a taboo topic, but it's so unfortunate because that limits our ability to learn from each other. We do the one-on-one with each other, right? The optimizations, the kind of things that we do, everyone does talk about, like diversify and stuff like that. But we never get past that. Never get past the maybe the edgier, the high, more controversial opinions or the minority opinions because there's no safe space for those kind of discussions. Those people, or like me, turn to places like Reddit and Discord and Twitter, but then you're kind of competing against the noise. You don't know who to trust. So I came up with this. I looked at the Plaid API. I was like, oh wow, you could actually verify investments and brokerages now, right? Well, what about like a pseudonymous but verified? Let people continue using their online handles, be anonymous. But you have your portfolio kind of connected and actually shared. So when someone says I'm bullish on Tesla and they actually own $2 million of Tesla, they're like, that's why.
That's your real advice. Yep.
Yeah. And that guy maybe knows something because he's been holding Tesla for so long. And so it's such a simple little mechanic. But a lot of our users currently love it, and I think there's a lot. I call it it's like putting your money where your mouth is, right? Like you look at a Seeking Alpha article or like a Motley Fool article, you're like, does this person actually own it? He's talking about like he's bullish on Pinterest for earnings report next month. I'm like, yeah, but how much Pinterest do you own, right? Like the ultimate proof is if someone's bad, and so that's what we have. We have a lot of commentary and stuff that we know exactly what someone's holding.
And did it take you a lot of time to design this product, to know what you wanted to build, or how?
Yeah.
What was the process like?
Yeah. I mean, product development is super hard. The first version actually looked more like a Twitch for stocks, where you were in a chat room, but instead of watching someone play a video game, you would watch the stock charts, right? And maybe there was something like a Clubhouse style audio. But it's really hard to start a new app and get like a live functionality going. So we're tabling that. We want to bring that back later.
So people can see the app today, can use it today, but tell us about the vision for 10 years from now. Where do you see the app to be? What do you want to build?
Yeah. So our mission is to increase the wealth and financial literacy actually of the world by making it fun to talk about money. Really kind of like breaking down like the taboo, the walls to get these stories out, right? And we're starting with stock trading. We think, it has the biggest market. It has just the daily stories because, the market's open every weekday and there's a story going on. And trying to capture and balance the right kind of signal noise. And eventually, I see this as like the next CNBC or the next Bloomberg TV, right? This is the media platform with a healthy amount of community, healthy amount of creators, healthy amount of UGC, where people are just like talking about the markets. You go here if you want to hear noise, or maybe just like subscribe to the newsletter. You'll hear like the top 10 of the day or something like that, depending on what type of user you are. But then eventually we also want to spread out into maybe real estate investing, really definitely crypto, and then other aspects of finance. Because the more I think we talk about money, the more we can just learn from each other. Like investing, I think this is obviously a top tier audience. For the majority of people, investing is really boring. It's a lot of numbers. It's not it's hard to grasp the tangible value. So I think you need to make it entertaining, right? And so, like I said, I learned everything I've known from Reddit, from reading the comments. And it's just because there's this layer of like, oh, you saw a meme, it's kind of funny, and you go deeper, you're like, oh, I didn't know that inflation's coming out on Wednesday. That sounds important, right?
Thank you. So let's go to some audience questions. This is a follow-up for what you had mentioned. You had to do some taxes and planning all these things. So Roxana was asking, can we talk about taxes? on investment earnings and strategies on navigating. And Roxana, feel free to have a follow-up question if needed. Yeah. What did you do for taxes and planning?
Oh yeah, I'm getting killed on taxes because this is all in my normal 401k, right? So every time I withdraw from it, it gets counted as income tax. And because I'm not 65 or 60 yet, there's an early 10% penalty on everything you withdraw. And so I was like, okay, I need to definitely get an accountant to make sure I don't get screwed on all this kind of complicated math, right? I should have, what I should have done is I should have moved everything over to a Roth, right? Because that gets you pay the tax up front, you don't pay the tax when you withdraw. But literally, I was going to do that, but I didn't want to pay tax on the initial 35K.
Wow.
Yeah. Because I was like, 35K transfer, I have to pay, I don't know, 15K in taxes. I don't have 15K to pay for that. I don't want to do that. But
In the long term,
run,
you just need to wait till your retirement age.
yeah.
So what do we have? There's a couple of other follow-up questions. Before that, Roxana, any other questions you have around taxes and the planning piece?
Yeah, I guess I just want to better understand, like, do you just bite the bullet and know that on your earnings, you're going to have, this big chunk go towards taxes? Or is there like a timing strategy where you could say, like, if you've earned X amount in X period, but you're taking losses on other stocks, right? You can time it accordingly. You're not paying taxes as harshly as you would if it was all earnings.
Yeah, the nuance, some specific tactics for taxes is, the big one is kind of guesstimate your profit in January and make sure you actually put that aside, because that's what I messed up for crypto. Everything went up in December 2017. It got realized, and then 2018 everything crashed, and I had no money for taxes in April. So that could actually really screw you over. In terms of like tax loss harvesting and stuff like that, there's tools online. You could be kind of smart about that. Otherwise, yeah, I kind of just bite the bullet.
Roxana, I think we need a tax expert for one of our follow-up conversations. So let's go.
Anytime I ask tax questions, someone says contact a tax expert. So
It's worth it. It is worth it once you find a really good tax person.
Great.
Yeah.
Yep. So let's go to some of the questions that have come in as well. So for Stephanie, she's asking, to what extent do you feel you were lucky? What are the most replicable elements of your strategy today?
I told you, like 120%, just luck. I don't think I'm smart or genius in any way. Like I said, if I had a superpower, it would just be I read a lot of stuff. I tell my therapist I consume the internet. I'm like on YouTube watching everything on 2x speed. I'm on Reddit reading all the comments until I can't take it anymore. I'm on StockTwist and Twitter ingesting literally with fire hose, right? I'm just trying to tune like what the hell is actually real signal versus not.
You should do a summary for all of this stuff.
Isn't that what AI can do?
Exactly. So let's go to somebody question earlier. So Kevin was asking about, he has 3 kids, 6 and under.
Yeah.
Our funds are in index funds or cash. So just trying to learn more about what him and his wife should do to take care of the kids.
Right. Yeah, I think, another part of this is that, being a high income earner obviously helped a lot with that kind of risk tolerance, right? Like knowing that, like, okay, if you messed up and lost 50K, you just have to work another year or whatever the TC is. And so, I think that's the crux of it, right? Definitely don't do any high risk investing unless you can actually earn that back in a relative meaningful time. Especially for your kids, like college funds and investing for the long term, right? But like, I don't know, it's like, especially us in tech, we know a little bit more about I have a strong opinion about the future, right? Like, yes, obviously putting in SPY and QQQ is the baseline, right? But it depends. If you want a little bit more alpha, have a stronger opinion. You like Google, you saw a lot of Google, you still bullish on Google, keep it all in Google, right? In the worst case, it matches QQQ, right? Or I don't know, just be relatively on top of the stocks, like the video this year, right? I think a lot of people could have seen that coming, but most people didn't take advantage of it. So
great, Teresa, do you want to ask your questions live since you're asking such great questions? Unmute and
yeah, hi. This is great, Kevin, and thank you, Chris. Yeah, I'm totally intrigued by this, and my passion and hobby, and what I love to do is investing. And I used to be in the investment business and manage portfolios and trade my own account. And what you learn in investing is asset allocation, all these very really wonderful strategies. And your strategy is amazing. I was just curious, Kevin, if your strategy is buy one stock position, and then as you're saying hold it, and do you have a certain point when you sell? I mean, how do you evaluate your strategy, and have you branched off into different sort of methodologies? And then that was one question. And then I know, like, doing all this reading is amazing. Do you also get information from like the regular Wall Street analysts, or do you kind of put that aside and kind of do your own stuff?
Great points. No, I'm definitely that person who I will go to the primary source, right? Look at the quarterly earnings and stuff like that, and then I look at, it's kind of like when there's like a disaster going. Some people look at the disaster. I look at the audience looking at the disaster, because that's the reaction, right? Essentially, the market is the reaction to stuff, or people's belief and hope for stuff. So yeah, I don't read the long form. I don't read any Seeking Alpha articles. Yeah, none of that serious mumbo jumbo. I mean, I think generally a company's good. The numbers should speak for themselves. You don't need to get that deep into it. And then it's just like how the market, either via the volume and the candlesticks and the other light form TA, or the sentiment of the noise online, kind of reacts to that. And you mentioned sell. It really depends on what the catalyst is, right? Like, I mean, earlier someone asked me about luck. It's unbelievable. I got like 4 or even 5 earnings calls correct in a row in late 2021. And I kept a tally of my count, because I was like 0 for 5 for earnings reports, like, because it is a coin flip. Like, the numbers could be amazing and it still crashes for no reason, right? No one can predict earnings reports, including like insider traders. Some insider traders who actually knew the numbers and still couldn't like predict the outcome of that stuff. But yeah, so it depends on what the catalyst is and whether it's run its course or it's kind of like hit its most potential, right? So like for I mean, each one's a little different. I can give you my current play. So in order to kind of launch Afterhour and kind of grow this new app, what I did was I started my second 35K challenge. And so back in April, I transferred another 35K into my Robinhood account this time. I took a video of that kind of went viral, got our first couple thousand users. And that's been a wild journey, because it was 35K down to 20K, because I was shorting NVIDIA. Never short a guy who unironically tattooed his company logo to his arm and wears a leather jacket. That was the dumbest thing I ever did. But then I turned 20K to 140K, riding Rivian, who had really good production. So that's a good example, right? So this was late June, and that means the end of Q2. And Rivian unofficially reports their quarterly production numbers every like first Monday of the quarter, right? And so, I was like, hey, I've been seeing a lot of Rivians on the road. Like, that was my only DD, honestly. And other people, kind of confirmed that. They look pretty hot, Tesla's not doing, I mean, also just like, kind of like putting on my VC hat like people, right? Like, I know a lot of good people from Tesla went to Rivian, just like through the cherry vine-ish, right? Learned the website's really well designed, probably good designers and software people involved as well. And you look at MKPHD and his YouTube videos, you have a good vibe that Rivian's probably one of the best EV companies. And they're tremendously undervalued. And if there is a surprise in this, Q2 earnings drop, it should go up a lot, right? So that was my bet. And then when it did, you just kind of question, oh, okay, if it went up, 200%, okay, that's too much, definitely sell, right? But if it went up 12%, you're like, that was a pretty good surprise. Let me keep riding it. The momentum's good, the candlesticks keep going, so keep owning it until you have another thesis going on. And then I think Adobe was my next one, because Adobe earnings was coming up, and with all like the image, they had a beta for like their image in-painting, out-painting kind of tool. And I saw a lot of TikToks about that tool. I was like, hey, you're gonna get a lot of new signups, because this is a new tool. They just mentioned AI a couple times for earnings reports, it's gonna do well. And so I bought Adobe. And then earnings came and they had a nice pop, and then I sold, and then I looked for my next play. That's kind of how I've been doing things. And currently, so fast forward a little bit, 140K, back down to 30K. It's literally, go on my Twitter, you'll see it up and down. Because I was in WeWork for the last couple of weeks, thinking that they'll actually survive. Also, super dumb. I'm currently in a company called Novavax, NVAX. So I'm currently, I guess, all in on my second challenge on NVAX. They produce the only protein-based COVID vaccine. And with Joe Biden and other folks reporting that they have COVID now, and who knows what's going to happen. There's apparently an FDA meeting. They're going to release, new boosters instead of September 12 or 13, which is next week. So there's just a lot of speculation and hype leading up to that. Hey, Pfizer, Moderna, they're all going to come back, and Novavax is kind of like the one that no one's ever heard of, right? But they have EUA, emergency use authorization. They've gotten like approved in Europe already, so they have legit. There's like a 30-plus-year-old business. But they have a 45% short interest ratio. And so, any surprises to the upside, shorts have to cover, and that usually causes a lot of volatility.
Again, this is not financial advice. So, Steve, why don't you unmute and ask your questions?
Okay. So one of my questions was, as part of an overall balanced portfolio, what's your opinion of the various robo investing platforms?
Great question. Great question. I mean, if you really want to set and forget it, they're all fine. I don't see how they're different than just going into like SPY and QQQ themselves. They do, some tax loss harvesting and fancy marketing, but they probably eat it up all in pieces too. So I do recommend a DIY approach if you really want to set and forget it, just SPY and QQQ. Yeah, I mean, generally there's a few high-level strategies, right? It's like all in America, SPY. Right? You want a little bit more volatility and believe in tech, add a little bit of Qs. You want to be really like a 70, 30, 10, whatever, depending on your age and other things kind of going on, right? Obviously, you have some bonds or international exposure, right? But generally, I'm a simple kind of person, honestly. Like if you can't tell, like one stock at a time, I'm pretty simple. I'm bullish on America and bullish on tech. And so if I were to, kind of piece out, it would probably just be half SPY, half Q.
Steve, keep going. You have such great questions.
So, Kevin, both you and I worked at Stripe. So what's your? I just left last November when they did the RIF. Yeah, so I was there for 18 months after my 9-year stint at Google, working on Google Pay. But what's your perspective on the IPO market in general? Is it going to come back? And then specifically your sense of, the likelihood that Stripe will have a positive one when they do it. And in light of what just happened with a company called Adyen, which is in their space, they took a 35% haircut 3 weeks ago. And so just sort of curious about, what your sense is of that whole area.
Totally. For context, I was at Stripe from 2015 to 17. Right, so we're like roughly employees number like 300 to 1,200, I think. An engineer there. And a quick aside first, I would say, I started this talk with a little rant on late stage capitalism. I can pinpoint when I got triggered into that, whatever my billion are. It was because two things I learned roughly at the same time. One was Proposition 13 in California, right? Like how housing is capped at 1% interest. Property taxes are capped at 1% increases every year as long as you don't sell. And any new buyer, it gets reset to market, right? Like that was just pure. I kind of learned about it when I was at Stripe. The second thing was Stripe offered an early exercise program, which was awesome, for them. So what early exercise means is that even though you've only been in a company for 1 month, you can early exercise and buy all 4 years of vesting. And if you leave, they'll just refund you. But what that means is that you realize the cap gains between the strike price and the fair market value for an NA at zero, so you don't have to pay any taxes on it because you're paying taxes on paper gains essentially, right? So I couldn't do it because I had no money. This is the whole thing like early money makes money, and that whole started churning in my head. I was like, damn it! I wish I kind of went to Facebook in 2013 when I graduated and took that gigantic sign-on bonus. Because then I would have money going into Stripe and I could early exercise, right? Versus I did when it started up first. And so, you know, those kind of two moments in my life, I think really helped forced or pushed me to kind of take a lot of risks, just because I saw notice how unfair the system is. Sorry, anyways. Stripe. You know, if you asked me before the tender offer, I would have said that's my next all-in. And that is what I said online everywhere. Like as soon as Stripe goes public, I would actually go all in with my 401k again, because I believe the team, I believe in Patrick and John. They have like kind of take over the world kind of grandiose mission. You know, I don't really care about the numbers. It's really like the people, like really old school, like Silicon Valley investing style, right? They're young, they have this kind of mentality, they love Jeff Bezos, et cetera, and they are in a space where they can kind of innovate and kind of do that versus just each of this kind of you know, incremental innovation. You know, the tender offer was disappointing. ADN, I don't know. I think that's kind of a misnomer because they're losing out on the U.S. market, but that means Stripe is winning the U.S. market. So I don't think that's a fair comparison. Oh, I remember now. The number one reason I was bullish on them was because the retail appetite would be out of this world. Like Stripe, I think Stripe and like SpaceX are probably the top two most desired companies. And no matter what, you just have retail's gonna eat that up and all that stuff. So I'm still very bullish on it. I think it'll be a $1 trillion company in like the next 15, 20 years. But you know, it'll be a weird ride depending on the macro.
Well, let's turn over to Drew. Drew, thanks for submitting a couple of questions. Why didn't you unmute and ask your questions?
Sure. Hi, Kevin. Thank you so much for coming today. Actually, I met you at the BCB event in LA Tech Week.
Yes. Hey, good to see you again.
So a few months ago. I don't know. Yeah, good to see you again as well. So definitely had several questions. So I'll try to keep it brief. In terms of the actual Afterhour platform, so I've been following it since we met and just seeing like what you're up to from a trading perspective. Wanted to see in terms of like how you plan to monetize Afterhour and slash like what the business model will be, and then secondly, in terms of some of your future strategies, like do you plan on actually trying to replicate what you did in terms of turning that 35K into like close to 10 mil?
Both great stories. The second one first. I mean, I call it my second challenge. You know, I'm taking it somewhat seriously because it is real money, but my full attention is on the company, right? And trying to run it and build that. And I think, you know, people know that, and I tell people in many of my trades, like, don't follow me. This is just I'm the slimmest of theories. I'm very transparent. I hate financial gurus. I hate the pump and dumps. I hate the analyst trading. That stuff sickens me. Part of the mission is to kind of cleanse the internet of these kind of fake gurus that are predatory and scam people. I've been scammed by them back in the crypto days. You know, these newsletters that, oh, we'll give you an early take, and then they already bought it and all that stuff. So I've seen the dark underbelly. But you know, I need to create content. That's why I'm trading right now and writing about my thoughts on the market, right? Because essentially we are a content creation platform for finance, and I am one of the top creators on the platform. So until that engine, you know, has really gotten going, and we have a lot of ideas for that, I'm you know, one of the top content creators. Because to me, it's all stories. You know, it's like, you know, Seeking Alpha, they have long form analysts that are like put me to sleep. I have stories that's like, I just screwed up, but here's my next one, or like, here's my thesis on why, and like, let's, you know, hold each other's hand, and we jump on Twitter Spaces together when earnings drops, because we're like, you know, crying together or you know, celebrating. But in terms of business model, you know, we are basically taking the Web 2.0 approach of growing and getting as big as we can. Because of our proximity to money movement, we think there are a lot of opportunities, especially in the financial services and tech space, to actually build something complementary for this kind of next generation investor. Like if you think about it, I mean, this is kind of a not too well researched take, because I don't really do angel investing or anything like that, but fintech feels like it's getting more and more commoditized. Meaning, you know, as a consumer, this credit card versus that credit card, this brokerage versus that brokerage, there's no difference between their sign-on bonus and some marketing spin, right? Like, oh, this one's like pretty full and for you know, this country or whatever. And I think that's because they all treat investing as a single player experience, right? And you do a lot of performance marketing to try to get people money on the platform, and then people usually stuck there forever. Versus social is actually a great gateway and daily retention and engagement loop, right? Because you have people consuming content, creating content, you know, hanging out with friends, listening to creators, engaging with your community, whatever. And then can we provide a financial service? I don't know what that looks like. It could be an ETF, that's like automatically generated by the plays happening on the platform. It could be a brokerage, right? And we could be head on with her on the hood and maybe charge a different kind of business model. I don't know what that looks like yet, but because of our proximity to these conversations, there should be a very big business opportunity here.
Eric, do you want to unmute and ask your question, Eric? Soderstrom?
Yeah, just curious about your thoughts on kind of the overall trends in, I guess, retail investing, to what extent it was sort of a unique phenomenon based on low interest rates and or pandemic, and to what extent you view it a long-term trend or something. Yeah.
Yeah, I mean, 2020 and 2021 was definitely ZERP, but it's also cyclical, right? You look at 2001, you look at 2008, and every different sector of market, it's cyclical. There's gonna be good years, gonna be bad years. And the only thing I do see is that, and I'm betting on, is that retail participation only increases. Caveat, the definition of participation. Some institutions define it as like dollars invested, some define it as dollars like volume, like buying and selling every day, right? Actual participation of the candlesticks. I look at it actually a different way. Social participation, right? How many YouTube, TikTok and YouTube financial influencers are there? How many people are watching them and commenting them, learning about the news? I mean, when I was in college, no one talked about the stock market, or like it was like that club, and that's it, right? And you go to college now, like everybody has a Robinhood app. They might have a couple dollars invested, or they at least aware of meme stocks. They're aware of JPAL, definitely. He's a micro celebrity. So I think financialization as a culture has seeped into the cultural zeitgeist in a way it hasn't before. So I'm bullish on retail awareness of the financial markets, and I think that will also eventually lead to dollars invested, especially when you look at the great wealth transfer and all that other kind of stuff.
So let's go to Alex Sukhanov. Unmute and ask your question.
Hi, Chris. Hi, Kevin. Thanks for organizing this session, Kevin. It's nice to meet you. Kevin, you mentioned that your long-term goal is financial literacy and financial well-being. Can you talk a bit about that? What is the problem that you're looking to solve in long run?
Yeah. So it's backwards, right? So like I think wealth is created by increased financial literacy, which is increased by more exposure to financial content, which needs to be done through entertainment. So that's how I'm thinking about it. I think most everyone else, hey, read a textbook and buy a class. Read some stuff, learn. Nobody wants to learn. People want to be entertained. People want to laugh. And I think just through osmosis, by like I said, this financialization of culture, watching your favorite YouTuber talk about how they budget and how they did their taxes, right? You just gradually pick up on things.
Yeah,
and then gradually financial literacy and then wealth.
It's interesting that you mentioned the high customer acquisition cost, which is a real problem, and one of the entertainment is something that can solve that problem, and it's an interesting approach.
So let's go to a live question in the audience here. Kushagra.
Yeah, Kevin, thank you for this. I think it's clear that finance is becoming entertainment.
Especially crypto.
Especially crypto. So my question was actually in crypto. Like we talked a little bit about public equities. And momentum trading and volatility gets us turbocharged when it comes to crypto. How have you thought about, can you share a little bit about your crypto journey and what are you excited about now? Mm-hmm. I'm sure you're in Pepe and a few others already.
Well, actually, I haven't touched a single crypto since 2018.
Oh, wow.
Yeah, I quit cold turkey. So, but I feel like I'm a healthy, functioning alcoholic where I can hang out in the bar, but I'm not tempted anymore, Crypto was amazing because, it drew a lot of people for all the right and wrong reasons. Yeah. And I definitely learned a lot. So my story was so 2013 and 15, I did my startup. It was called Fan Hero, an early Patreon competitor. That flamed out, died. And so I joined Stripe as kind of my first job, right? Gradually saving up money. And I learned about Ethereum in 2017 when it was $12, I think. And I went all in. It started back then. I went all in Ethereum at $12 with everything I had, which was only $8,000. And so that actually ended up, through a couple of other lucky trades, turning to 180K. And that also allowed me to free myself from the Stripe golden handcuffs. So it's like this weird twist of fate where like I hate crypto for a lot of reasons, but actually helped me unlock my golden handcuffs from Stripe. But again, I had nothing. So that helped pay for my exercise options and the taxes. I did not account for the crypto taxes. That's going to be later, but anyways. So my key takeaway from crypto was that it is the purest essence of like the louder you yell, the line will go up. And we saw that repeated with NFTs, right? The louder you yell, the line will go up. I think that's a very powerful emotion. Like that's my main takeaway from it. In crypto, it actually is true because there's no underlying, there's nothing underlying crypto. It's just people's belief in it. But we see the same thing in like Tesla, right? Like people strongly believe in Tesla and they yell about it. It's not going to affect it because there's actually numbers and production behind it. But I mean, with GameStop, that's definitely what happened.
One follow-up question to that, maybe more generic and unrelated. Like you started doing this in 2016, 2017, then like got deep into it. What's your advice to someone who's starting today? What are the sources they should go to? Of course, After Hours and a few other places. If someone is beginning their career today, or like say have $5,000 to $10,000 in disposable income, how will you advise them to go about thinking about investing, not investment advice?
I mean, I do think you need skin in the game to actually feel it.
Yeah.
You know, I think especially options, which is weird, and you don't really know how it moves unless you actually have skin in the game. But generally, I mean, the first thing, just make sure you're okay with your situation, okay with that, have higher earning income. That's kind of the baseline, right? Then if you're okay, just kind of YOLOing $8,000 into something, all of a sudden you're really invested in the future of that thing. You are hyper focused on like why that's going up, you're searching for all that information out there, right? You're on Reddit, you're on Twitter, you're just like going into like the caves looking for validation. That's also another struggle. Validation and confirmation bias, or what I call hopium. It kind of drives it, and you start learning. I mean, like you'll make mistakes. You also just start learning that was dumb. This works out. That was just a complete lie. But this is kind of true. So I think you'll start learning a lot more that way. I mean, it's kind of like fun money, right? It's kind of like when you go gambling and play poker. Like, I don't go to play to win. I go to spend 2 hours and have a good time. You pay $200 at poker table for those 2 hours, essentially, right? So you're essentially paying that to learn how to be a better investor.
So can I keep asking questions?
You don't also have to use everything. Actually, the most common investor profile on After Hour has like 90 to 95% of your money parked in index funds. I think that's very rational. But they have their 5% parked in Robinhood, and they call it their gambling account. Like that's kind of their nickname for it, right? And they might just do some fun stocks, some fun earnings reports, some fun options play, and they just treat it as like, okay, that was a zero, like no big whoop. If it works out, sell half of it, house money, and then continue.
Just before you ask your follow-up, my follow-up to you is, there's clearly a few people here who have access to venture capital funds. You mentioned you do, perhaps you're not doing angel investing today, but you perhaps had considered angel investing in venture capital funds. What role and what percentage should people consider putting in venture capital funds?
Oh, that's a funny one because I think I'm weird, and then I really appreciate liquidity. I'm not a big fan of like angel investing in real estate, just because I don't know. I don't like that illiquidity of it. It's just this weird thing that I haven't been able to change. Even though I've seen the numbers, I understand all the things. I do think angel investing is interesting for your career, especially because it gives you a closer look at certain companies and industries, and gets you closer connected to certain founders. But I mean, don't expect much returns from it.
Okay.
Especially because it's mostly based on the macro, right? I think I saw a question earlier about AI. Excuse me, I have this hot take on AI, or actually on any consumer, any VC trend over the last 5 years, which is that we're on, the tail end of the internetization of the world, right? Like, you could have, honestly, it was easy for the last 30 years, right? You had people coming onto desktops, onto websites, onto mobile, in the world, and that's a huge tailwind. And I don't know, I'm the weird kind of person where I describe almost everything to luck, right? And it's just like there's other people who describe everything to, oh, I'm a great investor, right? I picked that company. It's like, hey, you were born at the right time. You got good money at the right time, and then you learn how to invest in that anyways. So what I've seen in the last 5 years with everything from chatbots to crypto to consumer creator economy to AI, I think has been this weird brute force attempt to create another tailwind. That's my hot take, because everyone's incentivized to win. The media gets clicks, right? VCs can pump their bags, right? Founders get their next big company and project, right? Like, and valuations go up and some people are happy. Like, everyone is in this industrial complex or whatever, is incentivized to take that tailwind and make it true.
And they're looking for something after Web3.
Yes. And so that's my hot take on AI and the. I mean, AI does have a lot of stuff going for it, much more than obviously NFT than Web3. But anyways.
Let's go to Roxana.
Yeah, let's go to Roxana first. Roxana, unmute.
Thank you. I think my question is really around like mentality as the meta point of what I'm getting at here. It's just really around when you buy into something that you see trending, right? You're talking about doing the homework, watching earnings, like understanding the overall narrative in the market. And if I was to use an example that I've just been harping myself on is like Netflix. And I people that work at Netflix, like obviously watch Netflix. Like I have been in the Bay Area for like 13 years. Like I've seen this arc, right? And I'm like, okay, Netflix is up 55% year to date alone. And I can like kick myself and be like, oh, like I could have bought in. But then I think to myself, like if I had seen it, okay, maybe if I had checked and it was like up 10%, I'm like, oh, I already missed the lift, like, oh, it's too late. But if I had gone in at 10%, it would have grown another 40%. And so like, where do you kind of like right size in your mind this moment that feels right? And I imagine if you buy a stock on the downturn because it's going to turn around, obviously you don't want it to go a lot further down, but like just how you manage that mentality.
Yeah. I think what's key there is developing your own sense of like, this is underpriced, right? Versus correctly priced or overpriced, and how long the market can continue letting it be underpriced or letting it be overpriced. So like for Rivian, for example, I thought it was just severely underpriced. I think they're creating great cars, and the market just didn't price that in yet. So a sharp, U-turn. Netflix, it's pretty mature business, right? I look at it the same thing as Dropbox. Sorry for any ex-Dropbox, I lament on them a lot because they haven't moved in the last 10 years. And I think it's potential, right? Like people really, really strongly value what it could be. Like Tesla still had that because Elon Musk is crazy. And it could be anything. People will give it that high multiple versus Dropbox. We just know what it is. I mean, same thing with Walmart. We know what it is. Right? Target, we know what it is. So that's a very different kind of investment versus the ones I do, which is I look for something that I think the market has severely underpriced, whether in the short term, like Rivian crashed because of reasons, or WeWork crashed because they basically said they're going bankrupt. And then also overpriced, right? Like NVIDIA, everyone says overpriced right now, blah, blah, right? But the macro was willing to support that, so don't short it.
Kushagra.
I think there's another question.
No, it's a comment.
Oh, okay. So my last question is, I think let's get a little bit more specific around getting started. There are multiple things. First, you have to figure out, I love that you said that go all in on one thing, so that you can spend your entire mind space there. That's great. That's one thing you have to figure out is that. The second thing is which instrument to use. And this is where a lot of people get lost. Like, should I buy and hold? Should I just do options and then perps and 20 other things? How do you start?
Shares only, no margin, no nothing else. The main thing I learned from crypto, very strong lesson I took away is never touch anything that can just go to zero overnight. Like an actual rug pull, right? Like a shit coin, like an option, like a penny stock, or like something pending, FDA authorization. Like these are just nightmares because you just can't. That's bad luck. That's ultimate bad luck, right? Like there was no way. Like for most stocks, if it crashes 15% and you feel uneasy about it, you could sell and you lost 15%. Like it sucks, but you didn't lose it all. Because that's why I don't understand gambling, because that's always binary. And so shares only, don't touch margin because you'll get margin calls screwed. Don't touch options because that goes zero.
Thank you.
Yeah.
So Kevin, tell us how the Xoogler community can help you and your company. You've been so helpful to us over this past hour.
All good. I guess I have 2 asks. One is a personal one. I just had a newborn, my first time parent. He's 6 weeks old, and looking out a little further, like into like nanny or daycare services. Thank you, Roxana. in like the Menlo Park, Palo Alto area, if anyone has, sources or references or anything to guide me in that world. I'm already subscribed to a bunch of Facebook groups, apparently that's the way to go, but if anyone does a good nanny or daycare service, let me know, Kevin@afterhour.com. No S, it's just afterhour.com. The second thing is, it's full-time investors, like from all walks of life. Like, I just love to hear like what you think of the app, what you've seen, investing involved. Just kind of hear your how you consume the news these days. What are the kind of sources that you go to? Thank you, Chris. What's your daily routine every day? Because it's probably very different than mine, right? What's one benefit of doing a consumer app is I'm building it for myself, and so that can reach tens of thousands of people. But obviously the investor landscape is different. I have a thesis on what the next generation of investors are, but still many investors have different things, and we want Afterhour to eventually encompass all of that. So
awesome. Any final words of advice for all of us?
I think have fun with it. That's my personal take. Investing, it is a very serious profession. It's a very serious discipline. There's big money at stake, right? But I think I don't know. There's this kind of fun side to it as well.
Great. So thank you, first of all, Kevin, Sir Jack, for coming in today to educate all of us and kickstarting this Xoogler community around financial planning as well as discussions. We're going to do this every week. If you have any suggestions for topics, speakers, please send me an email, message me on Slack. Next week, we're going to have Ali Moez, who actually started Sandhill Markets. He did a startup and been running it for about 1.5 to 2 years, actually allowing people to invest in early stage startups, but recently pivot based on the markets to launch Sandhill Markets, which gives retail investors the opportunity to invest in the companies that you mentioned, whether it's the companies that are super private that you may want to get in. So next week at the same time, we'll have Ali Moez come in and speak. And again, Kevin, thank you again for being so open and educating all of us, and all of you for joining this community. Looking forward to growing this community of all of you, and hopefully all of us can take more out of these discussions from the Xoogler community. Thank you again, everyone, for joining, and thank you.